Yes, I know what you're going to say. 1 gram gold bars future investments. The premiums. Oh my God, the premiums. They're so large. And yes, they are. Is gold now out of reach? With the price of gold hitting nearly £2,000 per ounce, does this make it too expensive to invest in? Okay, so we've explained the title of the episode. How are we going to be breaking this video down? Well, we're going to be talking about gold bullion. Is it out of reach? We're going to be talking about the negatives, the positives, and the conclusions surrounding the price point of gold bullion as an investment. Now, currently, the price of gold for its spot price is £1,898.23. That's up 22.91% on the year so far. It's almost breaking that £2,000 per ounce mark, and that's an incredible amount of money. It's no longer a small amount to invest when buying gold bullion. And let's be honest, gold is a tier 1 asset. You have to pay a premium for this security of investment that you want to get involved with. Now, of course, you could switch to silver, but for me, gold's my favourite. Yes, silver's cheaper and there's still wealth preservation there and potentially great upside potential for silver, but it's just not got that same store of wealth and that same store of consistency and security. Now, of course, it's getting harder to save globally all around the world, but when we look at the specific figures of the United Kingdom and the United States, the year-on-date inflation right now in the United Kingdom is 4.2%. Comparing that to the US, they're currently at 2.89%. So the UK is nearly double what the United States economy is right now on the current inflation rate. Now let's go back to the figures. £1,898.23 spot price for an ounce of gold. That's an incredible amount of money. Now I'm going to compare this to a 1 ounce gold coin, a 1/4 ounce gold coin, and a 1 gram gold bar. Why these 3 items? Well, for me, they are what I believe are some of the most popular gold investments that people buy. And I also invest in these predominantly as well. I think they're very nice weights of pure high-level bullion and fractional bullion as well. So, how much currently is it going to cost you for an ounce of gold, specifically a Britannia? Well, you're going to be looking at around £1,953.46. So it's not quite £100 over the spot price. There's a bit of a premium for these sort of prices. Of course, it depends where you buy it from, but that's a lot of money. That's a lot of money to go out and buy and invest in an ounce of gold. It's basically going to set you back £2,000, near enough. And if it isn't right now, in the short distant future, it's pretty guaranteed almost. And I don't like using that word, but I think gold's such a safe and consistent asset to invest in. I think we really can look at seeing it hit £2,000 an ounce. That's a large amount of money, and that makes it really difficult to justify investing that into. Of course, there are negatives with investing that level of capital into an asset for such a long period of time, but I'm going to leave that for further on in the video. Moving down, you could maybe go to fractional bullion, couldn't you? You could buy a 1/4 ounce gold and Britannia, but that's going to set you back £517.08. Nearly half, well, it is £500,000. That's an incredible amount of money. When we look at the inflation rate in the UK being at 4.2%, we know that it's getting harder for people to save due to inflation. And of course, some people aren't financially aware or don't have that aptitude of how to be good with their money. So, talking about saving £517 is just not realistic for some people. So let's move it down a notch. You could say, okay, maybe a 1 gram gold bar, the smallest form of gold you could get. Yes, it's not capital gains tax exempt specifically, but of course it is below the capital gains tax threshold amount, so, you can justify it to a degree. Yes, I know what you're going to say, 1 gram gold bars future investments. The premiums, oh my God, the premiums, they're so large. And yes, they are. But of course, gold being as expensive as it is right now, that's pushing more and more people to buy these lower fractional denominations and weights of gold. So 1 gram gold bars are going to get more popular. they're going to be more in demand because it's more affordable for people. Even people who are financially able to invest, even that's still a lot of money. We're looking at £76.82 for a gram of gold. So there's definitely a premium to get involved with the asset that is gold bullion. It's definitely a tier 1 investment vehicle. You know, you're paying a premium, you're paying a big price to get involved with the security and the safety of gold as a wealth preservation device. So we've talked about the price points and being out of reach slightly, or becoming out of reach for most people. Let's talk about the negatives and the positives of gold. Well, we've got to start with the negatives because I never like to finish an episode on a negative point. So, starting off with some negatives of gold. Now, I did struggle to find some negatives of gold, I've got to be honest, but there are a couple that I think are justified. Now, gold's entrance fee. You have to pay the money. If you want to get involved in the yellow metal that is gold bullion, the best wealth preservation device, the best hedge against inflation, the investment asset that all investors turn to for financial stability in their portfolio, when there's economic turmoil in the markets or in the globe, gold is that investment asset. It's that investment vehicle. So for that, you have to pay the entrance fee. It's not small, but it is a great wealth preservation device. So being a negative of gold, it's not cheap to get involved with, even on a lower base when talking about 1 gram gold bars. Secondly, gold doesn't pay any dividends. If you're looking for an investment vehicle, an asset that's going to actually pay you income, that is not the asset for you. Gold does not pay any dividends. It's a wealth preservation device and it's a store of wealth. And also, gold's a long-term investment. When we're talking about buying a 1 ounce gold coin, a Britannia, or maybe a sovereign, you're locking £2,000 away into that asset, and you don't want to liquidate that for at least a couple of years. Because of the premiums you pay when buying gold bullion, initially if you were to buy it and then sell it fairly quickly, you'd actually make a loss because of those premiums. So gold has to be a long-term investment for that reason alone, and then solely for the reason that you're preserving your wealth and you're hedging against inflation. You're building up that value, not bringing it down. Now let's move on to something a little bit more positive. The positives. Gold is a tier 1 asset. It's the safe haven for money. It's the backbone of investors' portfolios. When there's economic turmoil on the markets, people flock to gold. It's a security device that people feel comfortable and safe with. Now, of course, nothing's a sure thing, and I don't like to use the word guaranteed, but gold generically is proven to be one of the safer investment vehicles out there for preserving and storing your wealth. Another positive for gold is that they're lower premiums than when buying other precious metals like silver. Also, it's secure and you can move it. Being a tangible asset, you own it. Unlike stocks, shares, you own online receipts to say you own those investments. With tangible gold bullion, you own the real asset yourself. So that gives you an element of control, an element of security, and you're able to move it when you need to. Also, it's much easier to move than silver because obviously its price point is so much higher that you're less likely to have the same amount of gold that you do in silver. Also, it's discreet. There's benefits to it being capital gains tax exempt when you're buying legal tender pieces, and you don't have to tell people about it. It's a quiet investment asset, which is really, really useful to have. So in conclusion, gold's price point. Is gold out of reach? Well, you have to pay to be involved with gold. Unfortunately, you do have to pay to get involved with the yellow metal. Now, you could start moving into more fractional bullion. It may be more common going forward because the price point is more affordable for most people. That's quite realistically the possibility going forward. We've often talked about 1 gram gold bars being the most popular piece going forward in the next sort of 2 decades because it will be what most people can afford. Now, time as well. You could buy fractional gold and stack it up and maybe sell it off and then buy into a bigger gold piece, but you're going to pay a lot of premiums to do that. So do you wait? Do you save up and then go and get that big 1 ounce gold coin to avoid the premiums? Well, technically you could do that. That wouldn't be a bad decision by any means. But it's hard, isn't it? Because while you wait, the price of gold increases. I often like the saying that it's better to have time in the market rather than trying to time the market. And I think that's quite a popular phrase with investors because you'll tend to find people would rather not wait and they'll probably get more involved with that fractional investments of, 1 gram, 1/10 ounce and 1/4 ounce and maybe even 1/2 ounce gold coins. Again, You could use the analogy, the best time to plant a tree was 20 years ago, the next best time is today. Gold's expensive now, what will it be in the next year, the next 5 years, the next decade, or 2 decades? You may wish that you invested now. Overall, gold is expensive, you have to pay a lot of money to get invested with it, but what could it be in the next few years? Maybe you'd be wishing you invested now. So I hope you enjoyed this video. It's been my topic on gold's price point right now and is it becoming out of reach? Let me know in the comment section below if you've enjoyed it. I really appreciate your time. Thank you for watching and I'll see you in the very next episode. Bye bye.